Now we have Vincent Mascolo, who's CEO at IronRidge Resources, a West Africa-focused gold and lithium explorer.
Good afternoon, Zach. Thanks for having me on today. My name is Vincent Mascolo. I'm the CEO, Managing Director of IronRidge Resources. IronRidge is a diversified explorer and developer, soon to be producer. We create value through the discovery and development of early stage organic exploration opportunities. Today, we'll be focusing on two key aspects of the business. Firstly, our lithium project in Ghana, which recently attracted a full funding to production investment of $102 million by America's Piedmont Lithium. And secondly, we'll be talking about the demerger of our highly prospective and advancing suite of gold assets in Côte d'Ivoire and Chad. Here is our disclaimer. Please read it at your leisure. A corporate snapshot. We're listed on London's alternative investment market, AIM, with a ticker IRR. And we have a tightly held share register with significant and supportive shareholders in Assur Limited, DGR Global, Sumitomo Corporation, along with board and management holding an impressive 6.5% of the business. Soon to join the register will be Piedmont Lithium with a $15 million US investment to acquire 9.5% of the business, and that will bolster IronRidge's treasury in the coming months to nearly $28 million US. We are a diversified explorer. We are lithium and gold focused African exploration specialists with a significant footprint in Ghana, Côte d'Ivoire, and Chad. We've made 3 discoveries in 3 jurisdictions in 4 years, and we have a pipeline of assets that deliver many more significant discoveries in the years to come. Our compelling investment case, starting with our most advanced project in Ghana, which is now fully funded to production. In the last 15 months, we have delivered a maiden mineral resource estimate, a robust scoping study, and now a fully funded to production package of $102 million by America's Piedmont Lithium, and we'll talk about that in more detail. As part of our second point topic for this afternoon, it's our suite of gold assets in Côte d'Ivoire and Chad. These will form part of a gold demerger in the coming months to unlock shareholder value. And as part of that demerger, we will maintain momentum through exploration programs and no momentum will be lost through the demerger of the gold assets. So to the key highlight of the last few weeks is our Awoya lithium pegmatite discovery in Ghana, which is now, as I'll keep saying it through the presentation, is now fully funded to production. It's an industry standout asset. And it has attracted the investment of Piedmont Lithium out of the US. So this is a very busy slide, so apologies for that, but I'll touch on the key highlight points. Piedmont Lithium, soon to be America's #1 lithium hydroxide producer, have committed to fully fund our Awoya lithium project into production via a US $102 million accelerated staged earn-in program for 50% of the Cape Coast lithium portfolio and an offtake for 50% of life of mine spodumene concentrate production. The decision for us to partner with Piedmont was very compelling and easy. With a proven and visionary leadership team, Piedmont is now set to become America's #1 lithium hydroxide producer. Piedmont's all-American status, established relationships with Tesla and other auto industry leaders in America was also another significant factor for IronRidge. The benefits to IronRidge are as equally compelling. A resounding endorsement of the quality and caliber of our lithium project in Ghana, with similar geology to Piedmont's Carolina project, they see minimal geological risk. It expedites us from explorer developer to near-term producer, which is very important. It also gives us a very strong cash position in the coming months of just on $28 million US. IronRidge will require no further funding, no further dilution, and gains a 50% free carry of the opportunity. IronRidge will also retain 100% of its Ivorian lithium assets for future initiatives. Our Awoya project and the Cape Coast lithium portfolio in Ghana puts IronRidge in pole position to service the US and European markets without delay. Strong fundamentals have delivered nothing short of exceptional project economics. The fundamental dynamic drivers of our project include exceptional geology, exceptional metallurgy, leveraging of first-class infrastructure, conventional mining, simple processing, producing a premium spodumene concentrate product, all from 1 kilometre from the national highway, 110 kilometres from the deep sea port of Takoradi, with adjacent multiple high voltage power lines running adjacent to the site, including hydroelectric power. As you can see, our Cape Coast portfolio runs along the Ghanaian coast and is situated halfway between the capital city Accra and the deep sea port of Takoradi. We have a significant tenure package of 684 square kilometres. From this slide, you can see the coarse and broad nature of the lithium-bearing pegmatites, which occur at surface across the deposit footprint. We are currently drilling on site. We have exceptional outcropping geology, and we're currently targeting a plus 20 million tonne resource upgrade. We're growing our resource rapidly, progressing with studies. We have 5 auger rigs, 1 RC rig, 2 diamond drill rigs currently on site, with another 2 big rigs on the way. As you can see from the yellow dotted circles, these are a very exceptionally high grade by industry standards, and these will form part of the updated resource estimate in the coming months. We are quietly confident of significant growth from our drilling campaign, with further expansions and resource upgrades in subsequent campaigns alongside and fully funded by Piedmont Lithium by the year's end, we believe. A key element to the success of this project is simple metallurgy. Exceptional metallurgy, producing a coarse crush premium spodumene concentrate of greater than 6%. We have low contaminants, simple processing flow sheet. We have also laboratory tested to produce a 99.92% lithium carbonate, all implying a first quartile costings with a low carbon footprint. Another key element to a successful project is exceptional logistics, and we're privileged to be leveraging of first-class logistics in Ghana. Close proximity to road, port, and power. It's a project developer's dream. I'll say it again, 1 kilometre from the national highway, 110 kilometres from the deep sea port of Takoradi, with multiple high voltage power lines running adjacent to the site. Exceptional geology, metallurgy, and proximity to operational infrastructure have delivered the right mix of economic highs and lows for the project. We have a low CapEx, low OpEx, low payback period, low contaminants, and a low carbon footprint, generating high operational throughputs, yielding exceptionally high returns and revenues. And you can see the outline of the deposit there. We have strong ESG initiatives in Ghana, and in fact, in all our jurisdictions we operate in. In Ghana, we are a 99% national team and fully engaged with local communities with many initiatives and programs in place. We have significant upside in Ghana and our Cape Coast lithium portfolio. We've only explored to date 12 square kilometres of a 684 square kilometre package. And the other value add targets and project areas that will soon be added to the fold are the Ejisamanku historical deposit, which has a 1.4 million tonne non-JORC resource running at 1.67% lithium oxide. We also have Campochrome, Crofu, Indiciman, and Enochi, all within a stone's throw of the Awoya project. And we have multiple additional targets which we're currently defining. And as I previously said, we have 5 auger rigs on site beavering away to identify more targets to grow the resource. So that's it for Ghana and our lithium project. And now I'll touch on the demerger of our gold assets. So in Côte d'Ivoire and Chad, we have multiple significant portfolios. In fact, we have 4 gold portfolios. We have 3 portfolios in Côte d'Ivoire with the flagship Zaranu. And in Chad, our flagship project is Dorothy. And this is roughly what it's going to be looking like. So our Chilean gold assets and our Ivorian gold assets will all go into a new gold company, which will be separately listed on a recognised exchange to enhance shareholder value. And we hope to be finalising a beneficial structure for all shareholders in the coming months. As I previously said, our Ivorian lithium assets will stay 100% in IronRidge as part of our broader lithium growth initiatives. Côte d'Ivoire has a lies within the proven beryllium terrain. Zaranu is we have a significant tenure package of just over 3,900 square kilometres. Zaranu is our most advanced gold project in Côte d'Ivoire with a 47-kilometre strike. And here you can see in the picture what will stay in the gold, what will stay in IronRidge and what will be demerged into the new gold company. As I said, Zaranu is our lead project in Côte d'Ivoire with a 47-kilometre strike gold corridor. You can see the scale potential here from surface in the weathered zone. And we are fortunate enough to have a very deep weathered zone of approximately 50 to 90 metres across the entire 47 kilometres of the project area. In Zaranu today, we've completed almost 90 lineal metres of drilling over only 12 kilometres of the 47 kilometre strike corridor. 90% of the holes to date have intersected mineralisation in some way, shape or form. It's a very promising project which we believe will deliver a robust mineral resource estimate in the coming months. And there are some highlight grades for your reading leisure. In Zaranu, we have significant exploration upside. As I said, only 12 square kilometres of 12 lineal kilometres of 47 has been drill tested to date, and we are open in both directions, north and south. Touching on our very important Vavwa portfolio, this is a long strike north and south surrounding the Abuja project, which currently has a resource of 3.4 million ounces. We currently have auger programs underway with several drill targets under definition. Okay, moving straight along into our other significant tenure packages in Chad, we have the first mover advantage in the Republic of Chad with just shy of 750 square kilometres of tenure. We have the first mover advantage in Chad, and we have already defined a 3 square kilometre anomalous zone over our flagship Dorothy project. The tenure portfolio in Chad lies within the Sahara Metacraton. We have the potential analogue of intrusive related gold systems, which is globally significant. There is no modern day exploration, and there are extensive artisanal gold workings across our site, and the artisanal tailings, as you can see in the right hand bottom corner, manually beneficiating and sorting. This gentleman's tailings are running at around 7 grams plus 7 grams per tonne. As I said, Dorothy is the flagship project with a 3 square kilometre anomalous footprint. We've completed over 15 kilometres of trenching with significant results. We've also completed regional aeromagnetics and ground IP geophysics, which confirm geological structures at depth. You can see the extent of the trenching here and a handful of the gold nuggets that we've retrieved from our trenching programs. Here's the anomalous footprint of Dorothy. You can see how large and coherent the anomaly is. The main vein, which is outlined in blue, is only one of several repetitious zones that we've already identified. There's some key highlights from our trenching programs. Our longest trench, I think, is in the order of around 1.5 kilometres. Dorothy is drill ready, and we hope to be drilling after the wet season before Christmas this year. We have significant exploration upside in Chad, along with the first mover advantage and our foot on some of the best ground we believe in the Republic of Chad. We have a 40-kilometre strike zone across our portfolio, which encapsulates Dorothy, Gueria, Kalaka, and Nabagay. Here's the teams across all the jurisdictions we operate, so Ghana, Côte d'Ivoire, and Chad. And that's it from me, folks. And we look forward to updating shareholders across all aspects of the business as news develops. Thank you very much for listening.
How are you today, Vincent?
Very well, thanks, Zach. Very well.
Well, we spoke, I think we had an interview a few weeks ago, but you're back for more now. A few questions that I've got sent regarding your company. I think the main one, I suppose, is with regard to Piedmont and the deal that you have there. Do you think that is the sort of the waiting game for that and the vote, etc.? Is that holding back prospective buyers in the stock?
Look, I'm not really sure what's holding back prospective buyers, given the similarities of Piedmont's North Carolina deposit to IronRidge's geological similarities to IronRidge's Avoya deposit. We don't see any geological risk. We don't see any approval risks at shareholder level either. So not really sure what's holding back investors at the moment.
Well, I mean, the shares are actually quite near the highs of the year. So in some ways, it could be argued that there's nothing really holding them back at all. But maybe once everything is clear, then the shares would then be higher. So it's sort of almost like a obsolete question, let's say. Yeah, look, you're absolutely right. I mean, you know, when it's done and dusted by the end of August, no later than the end of August, we'd hope to see that that will appease any hesitation from investors. Okay, next up, what are the timings of the Piedmont earn-in, the various stages, and how long until the first meaningful news flow on that?
Look, in respect of the Piedmont deal, come the end of August, at the latest, when we have our shareholder meeting to approve the allotment, the placing increase of our placing capacity. Look, we're already working together behind the scenes, preparing our committees and programs moving forward. So, and there will be a flow of news flow from drilling activities and exploration activities that we currently have on site. So come the end of August, the subscription and $15 million US will be in the bank account of IronRidge. And then they'll start spending another 17 million over the next sort of 12 to 18 months as we further regional exploration and progress our studies to DFS.
When do you think the process of demerging the gold assets will begin and we will be able to buy shares in the new company as well as have a pro rata holding?
Look, that's work in progress. That is already underway. It's not as simple as people think, just to say intention is to demerge. There are a lot of considerations, you know, tax implications for shareholders, and mindful that we are operating across 4 jurisdictions. So we're dealing with Côte d'Ivoire, Chad, Australia, and the UK. So look, we hope we'll be in a position in line with consummating the deal with Piedmont. Piedmont are pretty keen to also be involved in the demerger. And we will it's a fine balancing act to find the right mix that is in the interest of all shareholders. But we're on top of it, and our intention is to progress without delay.
What would the Ewoyaa scoping study numbers look like at current lithium prices in terms of revenue or IRR, etc.?
Well, okay, that's a difficult question to answer without running the models, which I can't do in front of you. But look, the current, our intel tells us the current sale price of lithium concentrate, 6%, was around $850 CIF. In Ghana, we're FOB, so free on board, so that would be around 825. Every additional annual year of production to our current project at prices we quoted at 650 was adding around 40 million to the post-tax NPV. But every $25 of increased product price was adding around $75 million to the overall NPV on a 10-year mine life. So if we were to be using an $800 per tonne spodumene concentrate price, you would see this NPV nearing 900 to potentially $1 billion US.
All right, and then are you able to give an idea of the value of the proposed demerged assets, or what they might be when they list independently, and which exchanges you're considering? So it's a bit of a forward-looking situation there.
Look, that's how long is a piece of string. It would definitely be more than the current valuation we're getting in the marketplace, which is zero. It's, as I said, it's a bit of a balancing act. We've got to time that with the market, but we feel that we'll be finding the right mix, which is accretive for all shareholders. In respect of exchanges, it's a multiple choice question, and we have made no definitive decisions in that regard at this time.
Okay, one of my own questions, is the result of all of this, or will it be that you become a sort of a mid-tier group? Is that sort of the goal that you would expect?
And in respect of the lithium or the gold, or both?
Well, the whole shooting match. I mean,
yeah,
you're 120 million pounds now. I mean, is it sort of 500? Is it billion pounds? What is this? What kind of, are there any analogous companies to what you would like to be or what you could be?
Yeah, look, there are a number of comparables out there. You have Sayona already at double our current market cap, and we see no reason why we shouldn't be at similar standing at the moment. And then as we progress over the next 12 months, I could see us being significantly higher than that again. Yeah, look, I think there's lots of upside. We have lots of news flow, increasing, refreshing scoping study in respect of grade, price, life of mine, and fast tracking to development, and our first commercialization. So, you know, at some point, Zach, we're going to move from NPV valuation to revenue-based valuations. So yes, we have definitely, with the Piedmont deal, we have accelerated our business model from explorer developer to up and coming on the pathway to producer. Where this is our first commercialization of one of our first greenfield discoveries, and we look forward to repeating that with the demerger of the gold assets.
Yeah, and finally, almost like a joke question or a fun question. Well, what are you more excited about, gold or lithium?
Both, to be honest. I mean, lithium, it's bizarre. You know, last year we were a gold company with lithium credits. This year we're a lithium company with gold credits. But the exponential lithium demand caused by the EV and stored energy revolution, the dynamics of that are fundamentally different than what they were 3-4 years ago. And gold has always been that sort of fiscal economic backstop, and we look forward to hedging on that later in the year. So yeah, we're in two great commodities at this time.
Vincent Mascolo, CEO at IronRidge Resources, thank you very much indeed.
Thanks very much for having me, Zach. Appreciate it.